So looking at who should be investing in this sector, my answer is all. And we have funds besides in the U.S. in Asia and in Europe and in the Mideast. And this trend is the biggest trend globally. And I don't see how any investor in the planet cannot have exposure to this because it's gonna change everything. So I think it's appropriate for a lot of people in the United States, for individual investors, the MLP and the Renaissance space, for equity income. That's where the MLPs are. We also think people selling fixed income investments that are very rich and is a good place to move into MLPs because you can pick up yield and get growth. And on the Renaissance side, which has more industrial manufacturers, we see that almost all U.S. investors are underweight that sector. They've been overweight financials and technology and biotech, but have been grossly underweight in industrial manufacturing because that's been the appropriate place to do. But we think people's portfolios now need to have this industrial manufacturing Renaissance exposure in place of some of those because that's where the growth of the sectors are going to be the next few years, not what's been happening in the past. From a macro portfolio allocation, MLPs are very interesting. If you take the traditional 60-40 stock bond mix or 70-30, which a lot of advisors have, and you add MLPs for 5 or 10%, so it's the only asset class that performs like a lot of the quantitative efficient frontier said, because it has higher returns, it has a little higher standard deviation, but it's uncorrelated to broader indices.